First up, we're going to run through some broad market averages. And then because we don't have any long exposure right now, we've been in cash since, well, we were 95% in cash after the close on 224 and 100% in cash by the morning of 225. We're going to run through a quick lesson on relative strength, looking at some of the better looking stocks in the market. We're going to talk about how we use the relative strength line to aid with identifying new leadership. So first up is the Nasdaq Composite, and I read somewhere on the internet today, and I can't confirm whether or not this is 100% accurate, but I believe this 6-bar pullback is one of the most extreme in terms of percent that the market's seen. So this is one heck of a pullback. And so this could be pretty interesting because now the Nasdaq is headed into the weekend, and who's going to want to hold stocks over the weekend into one of the nastiest sell-offs we've seen in stock market history. But I think we're pretty close to seeing some type of bottom potentially come in the Nasdaq, especially once it dips below this 8,400 area, which is the 200-day MA. And on the weekly chart, that is the 40-week MA, which is around 8,450. And there's this uptrend line right here also. So right now it's taking out the 30-week MA, and it's just above the 40-week. So I think I'm thinking a move somewhere around the 8,400 to 8,200 is a logical support area for the Nasdaq Composite. Now there's also a possibility that this sell-off is so nasty that it could go as far down as 20%. The Nasdaq is about 12, almost 13% off. So at 20% would be around 78.20. The S&P 500 already undercut. So it's not often that we'll see a broad market average in a very strong uptrend slice right through the 50 MA, then slice right through the 200-day MA. This type of sell-off, I would say there's high odds of it maybe opening slightly lower on Friday and then possibly reversing higher within the next few days. However, as I mentioned a few minutes ago, markets are very jittery right now. There's a ton of volatility, and we can't rule out a 20% correction. So far, the S&P is down about 12%. So a 20% sell-off would take it near the 273 area in the SPY, which would undercut the prior swing low from the summer of 2019. In just a few days, this entire advance, which was extremely powerful, has been wiped out. So if you can just remain in cash and sidestep this type of sell-off, you're going to be in pretty good shape mentally as well as financially to operate during the next bull market. And what I mean by mentally is when you do things the right way, you feel good about yourself. You're in cash, you're not trading, but you feel like you're in the zone still. You feel like you're doing the right thing. Next up is IWP, which is a growth ETF that we look at as a gauge for what our type of stocks are doing. And as you can see here, no different than the S&P 500 and the Nasdaq Composite. Basically erased the entire sell-off. It's obviously not as strong as the Nasdaq, and there's a 12% sell-off or so in the past few days, so it looks pretty ugly. Here's the S&P 400. Right now is almost 12% off the highs, about to undercut the lows of the summer of 2019. And finally, the Russell 2000, which is just a bit over 12% off the highs and closing in on undercutting the lows of the summer 2019. And I just want to be clear, I'm not saying that this market has to pull back in 20% before it can go higher, but we certainly can't rule that scenario out because conditions are extremely volatile right now, and there's just no buyers to be found. With broad market averages breaking down below the 50 and 200-day MA, there's just no reasons to be long right now. Maybe if you're a very aggressive trader and you can watch the market intraday, you're looking at maybe 5 or 15-minute charts. That's fine for you to try and establish a position in a stock that you feel that is bouncing off support, but if you'd have to have a very tight stop and be willing to exit during the day, maybe in as little as 15 to 30 minutes after you put the trade on. That's not what we do in this report, so there's really nothing for us to do right now in terms of new longs or even shorts at this point. So What we'd like to do, though, when the market is selling off, is put together a watch list of relative strength names and see what we can find in terms of potential new leadership once the market stabilizes and is possibly ready to bounce higher. And there's two ways we usually go about finding new stocks for our watch list, and that is one, looking at the pattern. So we'll go through all stocks that are trading within 25% of 52-week highs. So our usual flat bases, cup with handles. And then we also have a scan we run for a relative strength line to new highs. And that's where we're just looking for a stock's relative strength line, its daily performance relative to the S&P 500. We're looking for a line to move to new highs before the stock moves to new highs as a sign of strength. So for example, we can go on over to RNG, and we have a stock that's broken out, moving to new highs. And this is a good example of relative strength. On the chart, hasn't broken down below the 20 EMA. If this were the S&P, it'd be all the way down here. But it's not. It's holding up above the 20-day EMA. It's pretty strong. And you notice the higher high in relative strength beating the price to new highs. When the market's in a sharp sell-off, we're not going to always find a bunch of stocks with RS line to new highs ahead of the price right away. But if the RS line is hovering near the highs, that's usually a good sign. And we have a few examples of that. LK, after a 40% pullback, if this were to move higher for a few days, I could see that relative strength line turning up pretty quickly. FIVN, which this relative strength line moved to new highs this week, while the price pulled back to the 50-day MA. That's impressive. We have DDOG, Datadog, with a big reversal off the 50 MA, a few days sideways, and then a move up. And this relative strength line could be at new highs as well. And just to be clear, please do not confuse the RS line with an RSI. RSI index, relative strength index, measures overbought and oversold. Coupa is another chart we're monitoring. A little false breakout here at the highs, and it just lost the 50-day MA, but it's within striking distance of the 50, meaning that it could climb back above within a day. And it also has a pretty strong RS line, which could easily set a new high in no time at all. NTES, NetTees, is another stock consolidating here. Just broke the 50 MA today. And if it continues to sell off, then it'll probably no longer be on our watch list. But if it holds up around this area here and can reclaim the 50, has a great RS line, it's already moved to new highs. AYX had this big cup with handle type pattern. Not much of a handle though formed on the way up. It was just straight up. So it went to new highs and stalled. What we'd like to see from here is for the stock to chop around in a tight range above the 50-day MA for 4 to 5 more weeks. And as you can see, if it can do that, the RS line is already sitting just below the highs, so it could easily move to new highs before the price action, which, as we've said, is a positive sign. And last up is Docu. It's pulled back to the 50-day moving average and the highs of the last base. And note that the RS line is barely budged. It's almost sitting at highs, while Docu pulled back in about 16.5%. So that's pretty impressive. And in TC2000, you can actually scan stocks by the relative strength line. If you were to simply, here's the RS line. If you click on the indicator and hit create a condition, you can ask for a new high, and then it could be a 50 bar high or 250, and it could be now or it could be within the past few days. So you could say what's set a new 250-day high over the past 3 bars, and then you hit scan, and it'll scan right through a watch list. Now this is a scan run on just about every stock there is in the market, so that's why there's 171 results. But if we were to narrow this list further by liquidity and then earnings, I'm sure it would probably come up to less than 100, way less than 100, and we'd be able to run through that list fairly quickly. So that's something you can do in TC2000. All right, and getting back to the broad market before we end the video, Just wanted to point out that in the model portfolio, we're heavily long coming into last week, and the market sold off sharply, and we gave back some gains, but we still are positive for the year. So the market took us out of our positions. We followed our system. We were able to sidestep most of the damage here that was done below the 50-day MA. If you would like to learn more about our style of trading, please visit our blog at morpheustrading.com/blog, where there are over 10 years worth of articles on entries, exits, valid basing patterns, how to buy on breakouts, pullbacks, how to set stops. That's a wrap for tonight. Thank you for joining me, and we'll see you again next week. Have a great weekend.